Good morning. I am going to do a pre-record for this week's meeting, and if you all have any questions, please feel free to ask. Please feel free to ask and provide your comments below the video. So, looking at GJ. Before I start that, so I did say I wanted to restart the $100 challenge this week. And if you want to start with the $100, you can start with $100. If you want to start with more, you're welcome to start with more. All I ask is that you use between 1% and 0.5% of your account. Meaning if you have $100, you can use $1 or you can use 50 cents. Anywhere between it, whatever you feel more comfortable trading with. Or once you identify your, and let me just pull this up so I can show. Let me just pull this up. Where is my... Okay, sorry, I thought I had this up. Let me go to Trade Locker. Trade Locker. Go to live. Trade Locker. Actually, let me go to my account. Okay, guys, hold on just a moment. I'm gonna pause and come back. Hold on just a second. Okay, I'm back. Okay, question. Really quick. I am going to switch over to a demo account on Trade Locker. And I don't know if you all are identifying how much you're going to lose when you're putting in your trade, but I'm going to explain it, and I'm just going to assume that that I'm just going to assume that we don't know, right? I don't want to make the assumptions that everybody's aware, or I don't want everyone to feel like I just don't want to make anybody feel like either they don't know or they do know or they should know or they should know. So I'm just going to explain it. Okay. So let's look at the chart first and then we'll switch over to the demo. So based on the monthly, right? Let's look at our full picture, which is something I don't think everyone does, because when y'all are showing me screenshots of your trade ideas, I then go back and look to look at the bigger picture. That's the one thing I feel like you guys are missing, is looking at the bigger picture. Okay. So based on the bigger picture, we have one cycle completed. So we got the 3 moves within the month, within the 3 weekly moves within the monthly cycle. Okay. So, and then we had the pullback. So now we have the 1 weekly move. We're at the 2nd weekly cycle. So we're getting the pullback, and it could pull back further than this trend line. So I'm just going to erase the trend line, right? Because the 2nd could pull back to, and I'm just going to put it from this here to here. The 2nd could pull back down to the 78, which is an imbalance, before moving up for the 3rd push to the top side. And how far that's going to go, don't know. I'm just putting it here at this green line here. of course, we have the negative 27 of this push up. So we're expecting price to pull back, like I said, possibly to the negative 27. We may get a push down to get to come back and give us our peak formation before oh, sorry, hold on. May, and that's a big May, right? It may come all the way back up here to then sell, or we may just get this break, then get a pullback. And when I say a break, I mean a break of this swing right here, right? This is our key level. We may get this break. So then we may get the pullback. And the pullback may just be either there. It might even come up to the body of that. It may come up back up to here. We don't know how far it's going to come. We just don't know that. Okay. But my guess is we would at least get a minimum of, let's just take it to the opening of the imbalance. That's 1,300 pips. To the order block is 1,700 pips. So, let's go down to the weekly. Let me erase that because we still have 22 days in the month. But based on the weekly, we have a weekly bearish order block. So, and we're at a zone where price is probably going to come up in here and then may give us a pullback. So this may give us a pullback. It may give us a double top here with this bearish order block to then push back down to these lows. And this is the break that I was talking about on the monthly, right? So after this breaks, this could push back to this imbalance. It could push back to retest this zone before pushing up. If it goes up, it may not even go up. Let me just say that. But this will be the break. And then we may get the push back to give a double top here and then sell back to the 78. And then we may get a push back here. It could sell to the 88. We don't know. We're just going to trade what we see. Okay. So, and what I see is I have two key levels here. And let me turn off this magnet. Let me turn this off. So I have a key level here. So this was a high before we got our pullback for our second move. So price broke here. Then we got to push up and then a pullback. And then price broke here. So if you want to mark up, you don't have to. I mean, price did pull back to here. There's going to be some resistance here because this violated order block, but because this wick right here has already knocked it out or canceled it out or whatever. So this monthly candle could continue pushing down to fill this wick. Okay, that's the monthly candle. Still 22 days. So if I go to the weekly, based on the weekly, we're at this key level. Based on the weekly, there's a bullish order block, and then we have a bearish order block. So price is probably going to ping pong in between or consolidate in between these two order blocks. Okay. In between these two order blocks and give us one more push to the downside. And erase that. And give us one more push to the downside. So that's 700 pips. So based on the weekly, we're probably going to start getting a push back up. And I'm saying that one, because we're at a key level. Okay. This candle, which did not have a wick, has been tapped into, has been given a wick, right? Two, this was because there hasn't been a significant pullback yet on this weekly candle, we'll probably start getting that pullback. Okay, so now if I go down to the daily, based on the daily, we have this push down, we have this pull back, and then we have this push down. So we have a base drop, base drop. Okay. Again, that has tapped into a bullish order block. Okay. So again, we're probably going to get a little pullback here for either a continuation of a drop, or we will get some kind of momentum candle push up for a pullback to continue buying up. So if we get the change of character, and I'm going to go down to the 4-hour in a second, because price broke this zone and then broke back into this zone. So if we get momentum and then a pullback and then a continuation of a buy, just know we're looking at one push, then we might get a second push and then a third push. Okay. And I'm just putting it here because there's an imbalance there. There may be some up here. It may come up here to then start selling back down. Now, with that being said, I want to, and I think I just did it earlier, but let me just go back. If we look at the cycles, we are in the second weekly cycle. So you got one push, you got two push, and we may get a third push. One, yeah, two. So maybe it doesn't, so maybe the third push will come up here. So maybe we'll get, now that I'm rethinking this, so if this is the first push, this is the second push. So this may come back down to the 50% and then push up higher for the third push. And then maybe we'll get our peak formation to then sell back down to and let me say this. Let me do this. And I just want to make sure I'm on the right side here. Got one push, two push. 3 push. But this didn't come back enough. Okay. Okay. So my pushes appear to be a little off. So, and what I'm looking at is the first break of this last swing was here. For everyone who gets confused on the cycles, you're looking for breaks of structure. It's all it is. It's market structure. All it is market structure. Okay. So this was coming down. This gave the last swing high here. Price broke that here. So this is the first move. Price pulled back and then gave a second move. And then price pulled. Okay. That's right. Okay. So now that was 3 pushes. Now we come back and this is our first move. This is our second move. And so now I'm looking for price to push back and give us our third move. Okay. That's where we are in the cycle. I'm not, so now that I know that, so I'm just waiting for price to push down, give me a peak formation. How far down it's going to come, we don't know. So we got 1 push, we got 2 push, and we might have a third push. And the third push may break the lows, right? Right here we have equal low. Right here we have a key level. Price, every time price comes here, reacts. Every time price come here, it reacts. Come here, it reacts. Come here, it reacts, right? Came here, it reacted. So I'll expect one more push. We've got 1 push, looking for a second push, even though it's still within the order block. And then the third push may come and break these lows. Okay. And then we will wait for our peak formation. I'm sure it will happen somewhere in this zone. I'm going to go down in time frame to look for what this wick is giving, right? Delete that. So if I look at the daily, I have this candle with no wick here. If I go to the 4-hour, I have this 4-hour order block or demand zone here. Okay. There is a slight imbalance in here, but I would be expecting price to at least come down to this order block. Based on the 4-hour here, price could just pull back and then sell down to this order block. Now, we can do 1 or 2 things for the week. So the 4-hour is giving us, let's go back to the daily. The daily is giving us a order block. So what I'm going to do is set on this alert here. And I'm going to change the time on that. So we have between between here, the price may come and then continue selling down. We'll look for confirmation once it reaches that zone. And then this could be the trade for the week whenever this pulls back. And then we can trade it down to this 4-hour order block. Okay. And there we may get our peak formation to start the buy. To start the buy back up. So we got 1 push, 2 push. So this will be our 3rd push before the buy back up, and then maybe the sell back down. If it's going to go back down. So we'll see. Again, as long as it's below our zone, we will be selling it. Once it comes back, if it gives us bullish momentum to buy, then we will buy it back up to this zone. Okay. I am not going to trade anything in between. We're currently at a zone, as you can see here, daily, 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 daily. Resistance, 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 resistance became support. And then we broke out and now it's become support again right here. So I'm going to look for the sell back down to here. And then I'm going to take my profit there. And then if it continues down here and then it gives us bullish momentum, then we'll look for the buys from here to here. I will not be trading anything else in between, not even a stack. Because from here to here is, what did I say, was 400 pips. If we're starting out with $100 account, that has more than tripled your account, okay? Now, I want to flip to Trade Locker. New share. Trade Locker. All right. So based on Trade Locker, so what I want to do is go in and mark up my chart the same way my chart is marked up on my market maker cycle, except without all the market maker cycle boxes, okay? All I'm going to mark up are the key zones. So we know we have a key level, it's a key zone here. Okay. We know we have a key zone here, and I'm going to try to make this as small as possible. So when we get to the daily and weekly, it's not a huge box. So now we have a key level here. Okay. And that's all I'm going to mark up. That's all I'm going to mark up. Okay. And now I'm going to go down to the 4-hour. I don't know why these grid lines on here. Session breaks. Let's take that off. That wasn't there. Okay. So now as you can see and this happens to me all the time, and this is what makes me mad sometimes. So I'm going to just go back because this is not matched up with how it looks on Trade Locker. Remember, how it looks on TradingView. Remember, this order block was like sitting somewhere in here. But right now this is sitting above my zone. So I'm just going to, instead of looking this far, Oh, well, that'll do it. So this was the zone right here. This was the zone here. Okay. Key level, key level. Okay, now it's still off, right? It's still off. So we'll monitor which one is correct, Trade Locker or Trading View. But as of right now, we're looking at price pulling back to the zone to possibly start selling to the downside. So now I want to look for my 4-hour order block. And see, that's saying it's 500 pips. Okay. That's not the point. Okay. The point of the matter is if this is if this is going to continue selling, so we're looking to sell from here to here. Okay. And say we are going to put a pending. Okay. Now, this is how I want you to determine what your lot size is going to be. I'm saying between 1 and 5%. I mean, 1.5%. Okay. If you're not sure how to calculate that, this is what I'm about to show you. So if we're looking for price, and of course, we're not marking it up right now because we're going to wait for price to come to this zone to show us what it wants to do, right? But if price came to this zone, let's go to the 1 hour, and say it pushed back all the way up to this order block, maybe here, maybe to this order block. We don't know. We're going to watch it, see what it does. Okay. But say it pushes back up to here and then breaks through again, then we're looking for the sell. I'm just going to put it right here. And so you're looking for what your stop loss would be. Oh, why did that go all the way down there? Oh, wait a minute, because I need to sell. That's why. So the stop loss is going to be $10.31. This is at a 0.01 lot size. Okay. If I put my stop loss above this zone, because that is the last swing, I will lose $11.35. Okay. So now I will go and I'll put a 1. So that means I'm going to lose $113. If you don't want to lose it, then you don't trade. Don't trade it or change your lot size. Okay. I have $5,000 in my account. How much am I willing to lose? If I trade a 0.5, I will be losing $565. With $5,000, I'm okay with losing that in my account. So now I am not at 1%. I am at 0.5%. Okay. Now, with that being said, now I want to calculate what my TP is going to be. So if I set my TP, and I'm doing this because you all are not setting your stop losses, your hedges, and or your TPs. Okay. Please, I'm telling you, for every trade, I don't care if it goes further. I don't care if it stops you out. I don't care if it hedges and goes 150 pips. Okay. Always set a hedge, a stop loss, and your TP. So now that I have where I am expecting price to go, and we already know that there's a zone below here that it could go further down to. We don't care. We just know that at this order block, there's going to be a reaction. Once you get through that reaction, then you can determine whether you're going to take it to the next zone. Just I think the greed monster sets in, and then y'all just be going crazy. Okay. So if you're not willing to lose this amount, change your lot size. And with $5,000, $5,000 is 1% of my trade. That's all of my trade. Okay. But I'm not gonna set it at a 5 point. I'm gonna set it at a 0.5. Okay, because I'm willing to lose $500, 1%. Half percent. Sorry. So with that being said, this is how you're going to set your stop loss or set your lot size. Please don't guess, don't gamble. Set the amount that you're willing to lose. And that's all I have with regards to setting your stop loss and your take profit. Okay. And if there are any other questions on how to do this in TradingView, please feel free to drop a question and we can talk about it. Okay. Now I'm going to go back to TradingView. So based on TradingView, and I'm going to go to my daily. So, and I know we count the, I know that we count the moves. And I'm just going to go 1, this is 2. So I'm definitely expecting one more push. And whether that's here below this, sweeping this low here, and then creating. Now, as we talked about on Friday, if you're trading patterns, this could be a head and shoulders. So this could just come back up to this zone and then sell down to what we said was the blah, 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 what we said was the 78. So the 78 of this move is right here. Okay. Might even go to the 88. There is an imbalance here. There's an imbalance here. So it could come to the 88 and then start pushing up for and then start our peak formation for the third move. Okay. And let me reset this. And so if that being said, this would be a part of the third move. And then this would be our third cycle. Okay. So that would be the second cycle. This would be the third cycle, either here or 618. I like that it's So I'm just going to put it here. I'll put it here. Okay. And then once we get our third cycle, we'll be looking for a major move to the downside. Two. Okay. And then we'll be looking for the third one for and of course, once this third cycle, let me move this out the way. Once this third cycle completes, then we can fib the whole move, okay? From this low to this high for the move down to this 78 for the third monthly cycle. Up to here, right? So we'll be looking for a peak formation for this cell down to here, then peak formation for this buy up to here. So this second cycle move will be one of the, and although we have the weekly cycle deep pullback, this is the monthly cycle, the monthly second cycle deep pullback to then continue, or deeper pullback to then continue to these highs. So for us, that means we're going to get a great move down. We're going to get an exceptional move to the top side. And then we're going to get another bigger move to the downside. And then we'll like each of these moves, we should be and now, of course, this is not going to happen by December, but I will say that 2024, let's see, when is December 31st. I'm on a weekly. And I'm going to put, let me go to the daily so I can make this as accurate as possible. 31 December 2024. I'm going to put this here. So, so by this time, this is September, October. I'm giving us 30 days to flip to 10K. We should be able to flip to 10K in 30 days. Oh, one other thing I forgot to show. And I'm going to drop this in the, I am going to drop this in the, in our group chat. So this is going to be a compound sheet, a calculator that we're all going to start with 100 or whatever you're starting out with. I want you to put it in this balance. Okay. And every day, let me remove this. Every day, I want you to put in what your total is for the day. Okay. If you're at $100 by the end of the day, day one, or if your trade hasn't happened on day one, so on Sunday and Monday, if the trade has not happened, I just want you to put a 0. On day 2, if the trade has not happened, I want you to put a 0. I want you to stick to these days. And then once the move happens, I want you to identify what you made for that day. Okay. Now, although I said, like once price pushes here, once price pushes up, if let's say price ended by the end of the day on, let's say price pulled back by Wednesday, okay, or Tuesday. So price pulled back on Tuesday. And I'm also going to say you can you can trade it up if you want, but I will not. I'm going to trade the trend and the trend only. So let's say by Tuesday this pushed up. And then Wednesday this pushed down. It still hasn't gotten here. And you're still in the trade. For Wednesday, you're just going to put 0. Thursday, if it hasn't gotten here yet, you're going to put 0. If it's not until Friday that this gets here and taps you out, you take profit there, then that's when you'll put in whatever day of the week. So by that time, say if it's Friday, so you got Sunday, Monday, Tuesday. I'm not even going to start Sunday because Sunday, y'all should not be on the charts, period. Okay. So we're going to start Monday, Tuesday, Wednesday, Thursday, Friday. You see, that's the end of the week. It's going to give us the total for the week. Monday, Tuesday, Wednesday, Thursday, Friday. There are 5 sections in here for 5 days. That is not including Sunday. Okay, so do not trade on Sunday. So let's see, Monday, 0, Tuesday, 0, Wednesday, 0, Thursday, 0, Friday, what did we say our total was going to be? 1940. Whatever your TP, whatever your amount is that you take, where you take profit, 1941.92. And hold on, I didn't mean to do that. 1941.92. Numbers, here we go. So right here, I'm just going to put, because I had 5,000 based off that account that I showed y'all. Okay. So on Friday, I had 1941.92 or whatever it is, because that doesn't include the fees that were taken out, the swap, the all that. So whatever that number is, that's what you'll put here. So so for the week, I made 1942.92. Oh, maybe this was the Sunday. Friday, Thursday, Wednesday, Tuesday, Monday, Sunday. Okay, it does include Sunday. I'll go with it. Okay. So I'm gonna X this out and put my last Friday here. Okay. 1, 2, 3, 4, 5, 6. Okay. So this ended the week. So as you can see, with the 5,000, you ended your days with 19, whatever that is. This was your total earning. So now on day, I don't like how this is calculating. I mean, it's 7. Whenever you start, we're not going to say this is Sunday. We're not going to say this is Monday. We're just going to say whenever you start, that's when you start filling in. Okay. So for week 1, we're here. So say the following week, you start, say it starts buying and you take a buy and you make, and I'm just guesstimating, $2,000. And then you don't make anything, you don't make anything, you don't make anything, and then you don't make anything. So you just made $2,000 for the week. Now we're at $3,941 that you made. And you know what? I'm going to start with 100 because I want, for everybody who's starting with 100, I want it to be a realistic, I want it to be as realistic as possible. So say this was, instead of 1,000, we're just going to say it was $195. Okay. And then instead of 2,000, you made $200. Okay. You're at $395. The second week. Okay. You flip the account, more than doubled your account. Okay. And then let's say the next week you're at $395. And so you went 100 pips at $3 a pip. So just say you made $350. And then the rest of the week, let's just say you didn't make anything. Okay. So now you're at $845. And now let's say based on your $845, you traded a 0.8 for 100 pips. So that's $8 a pip. So that's $800. Okay. So, and then the rest of the week, I really want to say once you've flipped it, no more trading until the rest of the week. Unless there is an optimal trading entry that unless you're at a peak formation of the optimal move at the 78 to 88, don't trade no more. Don't trade anymore. That's all I gotta say. Or you're in a trade that's on the second leg or the second push, and you're expecting the third push. If you just stay in the trade, don't try to stack, don't try to do nothing, just stay in the trade to TP. Then you can stay in the trade and wait for and wait to take your TP. Okay. So this is how, and now that we're at 1645. Now, I would say put a a standard lot, but I'm not going to do that. I'm just going to say stay at the last amount that you're at. So you were at a 0.8, stay at 0.8 until this doubles. So the next week, say you get 200 pips at $8. So now you've got $1,600. Okay. Wait until the following week, and then you can put your account up to a standard lot. Don't enter unless you're at a 78, a 88 of a move. Wait for the third push. Wait for the peak formation. Wait for price to be in your zone. Trade it from one zone to the next zone. That is the zone to zone strategy. I don't understand. I feel like, and I'm just going to say this, I feel like I'm not explaining myself well because of the questions that you guys are asking. I feel like I'm not explaining myself very well. Either that or y'all just ain't paying no attention to me. That's one of the two. Oh shoot, hold on, my computer's about to die. Either I'm not explaining myself well, or you guys are just thinking too much into the trade. If it's not at your zone, don't trade it. If it's not at your key level, don't trade it. If you don't see your 3 pushes, don't trade it. If you've marked up your cycles and price is not ready yet to move to the next cycle, don't trade it. Stop jumping in and out of trades. Like stop. Okay. And then we're just going to go, say we're at the $3,000. I'm going to say put instead of a 0.3, instead of a 0.3, put let's see, what do we say? We're at 32.45 times 100 pips times 15 equals $1,500. So we're gonna say 200 pips times 15, because we know we can get 200 pips. So let's just say the next trade is a 1.5. You get 200 pips for the week or more. It could always be more, but we're going with the minimum, and that's $3,000. Okay. $3,000 for the week is more than enough. So by 31 days, you're at $6,145. This is so possible. This is so possible. And if you can get to 1,000, you can get to 10 in 31 days. Okay. And we didn't even go off the 3%. We were going a little higher. We went a little higher than 3%, I think. The first week, oh, it's 195. Yeah, we went a little higher. So this is 112. So yes, and on here, this gives you a few tips. Zoom out. This was provided to me by the guy that told me to learn how to crawl before I walk. But it is definitely a great, I feel like I'm not even doing it right, but I'm just putting my actual totals. That's calculating everything. So by day 4, we should have been at $112 and we made $195. So that's about right. So and then we made 300. So yeah, so we've made more than what the compound sheet is saying we should. Trade setup, zoom out to identify your trend, meaning look at the bigger picture. Look at the bigger picture, please. Always wait for entry confirmation. Once the confirmation has been met, then calculate your risk to reward. Do that on your trade locker or MT4, whatever, which MT4, MT5, whichever one you're using. And then pull the trigger if the risk to reward is good to go. Okay. So again, I'm going to drop this in the chat for you all to use. Okay. So if you have any questions with that, feel free to ask. And if you have any questions regarding the market maker cycle and where you are in the cycle, then you can ask that as well. So with that being said, I'm wishing everybody a happy trading week. If you're trading something else, good luck with that. But make sure you are analyzing your chart based off of your key levels and your cycles. Okay. Any other questions? Again, feel free to ask, and happy trading.